Good morning, ladies and gentlemen. Really glad to have you guys here this morning. And now, today is Monday, April 8th, 2019. And I'll tell you what, we got a lot to talk about today. First, I want to talk about Brexit. So, the first thing I want to do is I want to get the chart started right here. And let's take a look. Now, why Brexit is so important right now is on the Friday, they are facing the extension running out. And if the extension runs out and they don't have anything in place, and the European Union does not give them a further extension, they will go into a hard Brexit, what's called a hard Brexit or a no-deal Brexit. And so this Andrea Leadsom says a no-deal Brexit next week would not be so grim. Well, I'll tell you, it would be hard, but the thing is this would be over with. And they could, excuse me, they could start the recovery afterwards, once this is over with. They could start working toward a recovery from it. It's like anything, once you get over the hump, it's like when you have that last fever, when you have a flu, then you start getting better. You got to go through it. And if they keep putting this off, the worst possible outcome is to keep putting this off and have it go on and on and on endlessly. It's like some sort of a purgatory, So here's what we're facing. Wednesday is a pivotal day. The European Union is going to meet together on Wednesday, and they're going to decide. They have three choices. They could pick Theresa May, what she wants an extension, a short extension for a couple months. They could pick that. They're not likely to pick that. They've already said no to that. So they're very unlikely to pick that, and I think she knows that. That's one choice. The second choice they have is that they could give the United Kingdom no extension and have it run out on Friday and head toward a hard Brexit. The third choice is this what's called a flexible extension to the Brexit deal that will go on for like a whole year of uncertainty. If they pick that choice, then the United Kingdom is going to have to go into the elections of the European Union. That's the worst outcome if they pick that choice for the European Union and for everybody. For one thing, going into these elections, how's that going to work? And even if it does work, you got to understand there's over 70 members of the European deciding body that decides on everything. They sit down and they decide on everything. There's over 70 of them that represent the United Kingdom. Over 70 of them, these representatives. There's over 700 representatives in all. The total of all the European states. The United Kingdom makes up a large part of that. They make up almost 10% of that deciding body. Now, some of these representatives from the United Kingdom, if they get elected in, they've already said that they're going to make difficulty for the European Union if they get elected in during these elections. They've already said that they're going to be as difficult as possible. The European Union has to consider that fact, that if they take part in these European elections, that the representatives that come in from the United Kingdom, then these duly elected representatives are going to be, it's a loose cannon. It's a loose cannon, guys, and they know this. Now, France is taking a hard line. So we're going to have to see what the outcome is. Do not be surprised if on Wednesday the European Union does decide not to give any extension to the United Kingdom. Do not be surprised if that's the outcome. And if that is the outcome, it's going to come as a real shock to these markets. An absolute, utter shock to the markets. Because they're not expecting that outcome. But I see that outcome as having a much greater potential than an awful lot of people would realize. Anyway, let's take a look at the markets today. And first thing we want to do is, okay, where is it? Right here. We're going to take a look at the Baltic Dry Index. You know, the Baltic Dry Index has picked up just a little bit, just a tad, you know, from what it was. It was in the 600s, now it's in the 700s, but it's still exceptionally low. And low means that this is a sign of the system, how much trade's going on and everything else, how much cargo they're carrying on the ocean and everything else, this Baltic Dry Index. Okay, so first thing we're going to take a look at here is silver. Silver took a bounce up today, nice little bounce, 16 cents. Here's the chart, and we can see it's leveled off at roughly 15.24. Let's take a look at gold. Gold's made it up above $1,300 again. Thank goodness. You know, that was a rough when it went down below 1,300. But it's showing strength, and this strength is coming from what's happening. President Donald Trump has said, hey, you know what? We're going to go back to quantitative easing. And oh, by the way, you know, you're raising interest rates. We're going to lower them again. You know, and he's getting a surprising amount of power over the Fed. And so this is dovish action, and this dovish action is going to have a really strong effect upon the price of gold, silver, and cryptocurrencies. I think that gold and silver, the potential of how high they could go would shock you when compared against a hyperinflating dollar. Honest to gosh, you know. So we're going to have to wait for that. It's something that's not going to happen immediately, but you know, an awful lot of guys are in there to hang on for the long term, and that's smart because it's going to pay off in the end. Take a look at cryptocurrency today. Cryptocurrency market capitalizations, and what we're looking at is $180.5 billion with a 50.8% Bitcoin dominance. And we're seeing the coins pretty much holding their gains. There's a little bit of a fluctuations up and down. Litecoin took a little move back down below $80. It's $88.79. Litecoin is a coin to get excited about as far as I'm concerned. I see a lot of potential in that coin in particular. Bitcoin is right now it's up 0.98% at $5,206 on the day. So now let's take a look at oil price. And I want to talk about the Canadian dollar. You know, we see oil price steadily creeping upwards. It's creeping upwards, but over a period of months. $63.33. And this creep upwards in price could continue for a while longer because OPEC's behind it. But here's the thing, guys. The Canadian dollar, let's take a look at the Canadian dollar. Now, a lot of my viewers are in Canada, you know, and you're very interested in what the Canadian dollar is going to do. I'm going to tell you the Canadian dollar is going to hold steady in around 74 cents US as long as oil prices continue to rise. But this is not showing strength in the Canadian dollar because the Canadian dollar should have went up to 76, 77, 78 cents. With these rises in oil price, the Canadian dollar should have been rising the whole time. And in fact, it's not. It hasn't budged. It's been staying in this area. We can go all the way back into 2017, and it was 74 cents. And it's still the same area, 74 cents. And through all this oil rally, the Canadian dollar has not budged upwards. It should have. Now, when oil prices start to fall again, we're going to see, because the Canadian dollar has not budged upwards, this is a bad sign for the Canadian dollar. And we're probably going to see the Canadian dollar lose. It could go right down into the upper 60s if the oil price starts to slide. So we got to keep our eye on that. If you're in Canada, you got to keep your eye on that. Inflation. Because the dollar's been staying around 74 cents, we're seeing a lot of inflation here in Canada. And it'll get a lot worse if the dollar goes down into the 60s. You can trust me on that. Now, let me see if the Dow's open. Yes, the Dow's open. We're going to take a look at it. We're down 158 points on the day. No, 161 points on the day. 26,263. The the Dow, honest to gosh, they might be suddenly cluing in that, hey, you know, on Wednesday, this might not go the way we think it's going to go. That might be cluing into a few of them. But I'm going to tell you, if you want to see the Dow really drop, just watch what happens on Wednesday if all of a sudden the European Union says, oh, that's it, you're not getting the extension to the United Kingdom. No more extension for you. If they tell them that on Wednesday, you're going to see a plunge in the Dow. You know, I can't tell you exactly how big the plunge would be, but then it'll suddenly clue into them, hey, you know what? Britain's only got, or the United Kingdom's only got 2 more days. And what can they do in 2 days? If the European Union says, no more extension for you, then there's 2 days left. Talk about some scrambling going on. I want to tell you, let's take a look at German Bank today. German Bank is down today. That's why I got it on here. It's 7.37 euro. And, well, it's just dropped a little bit more. It's down 1.75%. And they got no room to drop percentage points, you know, down at this point. I mean, when you take a look at the 5-year chart on this thing, it's just down, 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 down. Now they're bottom bouncing. They better not go below 6 euro. Because I'm going to tell you, I've pretty much figured in my head, you know, if they go below 6 euro, it's just going to start to fall like precipitously at that point. So they're only just barely keeping their head above water, the German bank. You know, I got to check in and see what that deal is with them joining up with Commerce Bank. I haven't heard too much about that lately. It could be a no deal. That could have just been a ruse to try to buy time for the German bank. I just don't know exactly what's going on. Let's take a look now at U.S. Treasuries. What we're seeing right here is complete and utter madness. Some yields are falling, some yields are rising. It's a mixed bag today, really mixed bag, but there's no real big moves in the treasuries today. I don't see anything really big. It's not even 1 basis point on any of them. So the treasuries are basically not really doing a whole lot today. Let's take a look at the US dollar index today. 97.01. We see a drop in the dollar index. You know, when you see the dollar drop, you generally see gold going up, you know. That's the way it works, basically, generally. They're the opposites of each other. There's a, you know, the more gold you can buy with the dollar, that keeps a strong dollar. And this is why they've suppressed the price of gold all this time. They've suppressed it. They've kept this price suppressed endlessly on gold and silver. Cryptocurrencies, it's been able to maintain a market it's awfully hard to actually be able to control the price of cryptocurrency. But they can control this price, the US dollar index, very readily. One of the reasons why it's so hard to control the price of cryptocurrency, so hard to control Bitcoin is, everybody out there knows there's only 21 million Bitcoins. Now see, there's an undetermined number of silver in the ground. They could argue that the world is full of silver. And this allows them to make all these paper short contracts as much as 400 times the amount of real silver that exists. You know, so 400 paper short contracts that say silver exists where silver doesn't really exist. But everybody knows a set amount of Bitcoins. That number is so if they start making paper Bitcoins, you know, paper short contracts on Bitcoin, well, how far can they actually reasonably extend that when Bitcoin is obvious to everybody in the world there's only 21 million Bitcoins? Are they going to make like 1 billion Bitcoins, but all paper? Then it doesn't work as good as silver. Silver, they can get away with it better. And they've been doing it for a longer time, and they've got really tight control over the silver market this way. But you know, there is a weakness or a flaw in their control over the silver market. The flaw is they can only keep the game going with the paper short contracts as long as they have deliverable silver and silver that's available for sale in inventory to cover. See? Here's the thing with silver. They're totally reliant upon the mining industry to create that available inventory that's available for sale into the market. Most of the mining inventory is already allocated for industrial demand. Okay? And so coin and bar demand come along, and if as long as they're low, they can cover it. They got it covered. Right now they got it covered because coin and bar demand is fairly reasonably low, and they got industry covered all by the mining supply, and the miners are just pumping it out of the ground as fast as they can get it out of the ground. They're keeping up. They're keeping up. But if all of a sudden they're using most of the mining supply for industry, and they got a little bit left over for bar and coin demand, and bar and coin demand is low, they're fine. They're fine. But all of a sudden, if bar and coin demand explodes, then they're going to have to try to find that silver someplace in world inventories of silver that's available for sale. Now, listen to what I'm saying very carefully. Silver that's available for sale. So you can't count all this silver people have, like they've bought monster boxes, and people say, oh, there's all kinds of monster boxes out there. People have bought all kinds of monster boxes and stuff like that. You know, yeah, there's all kinds of silver out there. But are they going to sell it at these prices when some of them have paid more? No, they're hoarding it. They're hanging on to it. And they're waiting. They're sitting there and they're patiently waiting for the price of silver to go up. That silver is off the market. You can't count any of that. And there's thousands, quite literally, thousands of millions of ounces. There's billions of ounces in these inventories that are not available for sale. There's billions of ounces. But the amount of inventory that these guys have to actually work with has nothing to do with that. The inventory that they have to work with, is available for sale, is very tight, and it comes from the mining supply. It's new, fresh silver. It's just been dug out of the ground. So, you hear these guys on there make it sound like the world's just loaded with silver, and that there's enough silver to last for hundreds of years. You know? This is very misleading. The fact is, there could actually have a silver shortage. If bar and coin demand were to go too high, too much where the miners can't supply and industry sucking up all the rest, and they hit a short squeeze on this stuff, and it's just the whole thing could just melt down on them, and they'd have a failure to deliver. So they got to keep the price suppressed to keep people saying, oh, I don't want to buy silver, you know, because, that's the way the opinion is about silver, because they've kept the price suppressed. That's why the opinion's that way, and this keeps the bar and coin demand low. That's what it does. It keeps everybody making a yuck face whenever you mention the word silver. Oh, that's never going to go anywhere, and all this kind of stuff. And that's what they want. That's what they want. But if we get some sort of a crisis, bar and coin demand picks up, and the price starts to move upwards a little bit, because, say, they go back to quantitative easing, you know, and there's new fresh money coming into the system, and that money has to go someplace. Say some of it starts to go into silver, bar and coin demand starts to pick up. Then all of a sudden, when the price starts to move up, say $17, $18, $19, all of a sudden there's going to be more interest in the market, and people are going to start to look at silver a different way. Bar and coin demand will explode, and they're not going to have enough silver to go around in the silver that's available for sale. Okay, listen, thank you guys for listening. Like and subscribe, and we'll catch you in the next show, guys. Bye-bye.